Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Wednesday, the 16th of August, and we have Kian, CEO of Astral Asset Management, coming to us out of Singapore as our guest today. Now, Kian, as always, lovely to have you on the show.
Good afternoon.
Now, Kian, before we get your insights, and again today we're going to do a little focus on China. We're going to take a look first at how markets in the region are performing in the first half of the day. But we start, however, with cryptocurrencies. Bitcoin is at 29,201. It's down 0.67%. Ethereum is at 1,826. It's down 0.91%. Looking across to regional stock markets, we start where you are, Kian, where the Straits Times Index is down 0.53%. Bursa Malaysia is in the green, it's up 0.15%. Shanghai is down 0.27%. The ASX All Ordinaries is down 1.45%. The Nikkei is down 1.2%. The Hang Seng is down 1.19%. And rounding up the numbers, we've got the Kospi, which is down 1.57%. We've got a sea of red with the exception of Bursa Malaysia. Tell us why, Kian.
I think one of the reasons is the negative handover from the US markets last evening. The funny thing was the consumers' results and data was good, but that spooked the market thinking that the Fed could continue to maintain a period of high interest as there's no signs that the economy in US is slowing down or facing a recessionary risk. At the same time, you have a series of negative news coming out of China this morning, which explains why most of the markets are in the red.
Okay, so there is this whole lot of pessimism around China, and the data coming out throughout the year has been pretty much negative or below expectations. You, however, are generally quite bullish about China over the long term. What are the macro factors around China in the long term that's causing you to continue to be bullish on China?
I think firstly, right, from for the last couple of months or weeks, you'll find a series of bad news coming out from China. In particular, the economic data, for instance, the deflationary fears, the export numbers was not great, the production numbers was also slowed down. So that creates a environment of volatility and concern for investors. And if you look at since the beginning of the year, the COVID recovery story actually didn't play out as well, which triggers further concerns. And last but not least, which is the most important, you could see that a lot of these real estate companies, and this problem has been around for years, has not really got themselves out of the hole that they dug themselves with, which is huge debts that most of these companies have. And the recent fears from the fact that Country Garden didn't repay the bond coupons, as well as one of the largest shadow bank, right, Zhongrong International, has also failed to repay its investors on their coupons, has created an environment of fear and concerns, and as a result, you could see a lot of investors running, out of China, right? And what we have seen is in this year alone, whenever there's good news like the COVID recovery story in China in January, investors are rushing in, and when there are concerns as a result of macroeconomic data, as a result of US-China tensions, or when the recovery is not great, people are all rushing out of China again. And last but not least, if there are announcements of government stimulus, government incentives trying to support the market, investors are excited and they rush back to China again. So you could see within the short term there are a lot of in and outs. And unless you are extremely lucky, I'm not saying that you could even be good at, you will get whipsaw if you try to get in and out of market this way. The way we look at China is more on the longer term basis. Currently, the anticipated growth of China in 2023 is, say, 5%. And let's say that China has not achieved this and continue to achieve only 4%. Between 3 to 4%, I think in 10 years' time, China's economy is still going to be the largest in the whole world. As long as they keep growing at this rate for the next 10 years. So it's a matter of time. And if you think that 3 to 5% is not a great number, just look elsewhere in the world. There's a lot of economic contractions in other parts of the world. In Europe, you're actually having an ongoing war, which nobody knows when it's going to stop. There's hyperinflation problems. Even in the US, the growth is not so fantastic, and we expect an economic contraction as interest rates continue to stay at these peak levels. So nobody is complaining if you're looking at a country of this size growing from 3 to 5%. Secondly, if you look at the central banks and the government policies, China does have a lot of room and space to basically loosen monetary policies and introduce strong fiscal stimulus. Most of the markets are disappointed that they're not doing it fast or ample enough within a short period of time. But they could be adopting a look and see attitude as the whole world is evolving and under a lot of economic duress. So you don't expect the government to repeat what it has done in 2008, which we look back and realize that it's also not a good idea if you have such a sharp stimulus within a very short period of time.
Yes.
On top of that, if you look at the various sectors like EVs, like new energies and environment, China is in the forefront. Nobody invests as much on green energy as China does. And it is moving very quickly to manage its greenhouse emission gases. It is moving so quickly on the EV sectors that there are more than 300 EVs players currently in China, competing aggressively with the US in the manufacturer of electric vehicles going forwards, and everything down the value chain, ranging from the batteries all the way to the automobile frames, etc. So there will be huge, progress on certain sectors that we are seeing, and these will be the investable, sectors. As long as Chinese can overcome their consumer sentiments and concerns, right? The consumer spending powers will return, and that will give another boost to the Chinese economy.
Kian, on that note, thank you very much for your insights. Thanks for coming on the show.
You're most welcome.
Now, we've been speaking to Lee Kian, CEO of Astral Asset Management, coming out from Singapore on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.